Hello, hello. Good morning, good afternoon, good evening. How are we doing, everybody? How's everything going? All right. Hi. Okay, looks like you can hear me. Okay, welcome back. It's good to see you. It's good to have everybody on board here for Free Access Day on FX Street. There's a lot to talk about. There's a lot going on. If you missed it last night, I was on CNBC, or this morning if you're in Asia. And there's my appearance. This has been described to me as merciless. You tell me. But basically, I let them have it over Europe. And, of course, we are short the euro here. We have been for some time. And here in the chat room, that's something that I expect to continue. I'm looking for 126.60 as the next stop on the euro. The way that we operate here, I want you to feel free to ask questions. You know, it's if you're not familiar with me, I'm a frequent guest on CNBC, as you can see here. This was taken within the past 24 hours. I'm also published author for Wiley Trading. You know, I manage client money through Barchetta Capital Management. So I'm a money manager, author, do TV personality, and I'm on here very frequently on FX Street. And I'm happy to answer any questions that you have. So why don't you use this opportunity to think about what you'd like to ask me over the next half hour, so that I can go ahead and answer your questions. When I started out in this business, all I did was ask questions, and you can always tell the people who are serious about being successful, you know, because they're the ones that are asking the questions. Anyway, hope you enjoy the CNBC appearance. I sure did. Let's take a look. I'm going to give you a quick rundown of the Cyprus bailout situation, and then we'll get to your questions. I see them coming in. Keep them coming. Keep them coming. I'll give you a few minutes to keep adding your questions while I run through the Cyprus bailout edition. This is my quick, handy-dandy guide to what happened in Cyprus. Just in case you're not clear, and maybe a little bit of a different spin on it, I try to keep it fun and entertaining, at the same time informative, you know, and that's what it's all about for me. So here we are with the Cyprus bailout edition. Cyprus is broke. Yes, I spelled Cyprus. Yeah, there's an R missing, I know. Cyprus is broke, and unlike other countries in Europe that cannot pay their bills, the Troika decided that depositors, you know, the people with money in the bank, should share in the cost of the bailout. Now, who decided this? This is the most important part of the presentation, is where did this decision come from? You know, did the Cyprus government decide that it would be a great idea to reach into people's accounts and take money out? The answer is no. It was not the Cyprus government. The Cyprus government, that was put on the table by the Troika. Who is the Troika? It's the European Union, the European Central Bank, and the International Monetary Fund. This was their idea. Now, if you live in the United States, you're probably familiar with FDIC insurance. I'm sure the UK accounts are insured as well. In Europe, bank accounts are insured up to 100,000 euros. And I just want you to know that the original proposal, last week's proposal, was going to tax all depositors. They were going to reach, even if you just had a couple of hundred euros in your account, they were going to reach in and take a little bit of that money. Now, the problem with taking money from all the depositors is that you're going to upset all the depositors. And that means you're going to have a lot of angry people in the street throwing things and flipping cars over and tossing Molotov cocktails and generally behaving in an unruly fashion. And so someone came up with the idea, say, okay, we will not tax folks who have under 100,000 euros in the account, which is going to be most people. So most people will not be touched. They're just going to focus on the wealthier accounts, and a lot of the wealthier accounts are going to get hit really hard. And but we're going to try to rationalize it. Now, there are positives and negatives to this idea. Now, the positive is this. There are a lot of countries out there that are broke or teetering on bankrupt, and if citizens of these countries are forced to help pay the debts, perhaps they'll control the spending. We have a disconnect. People want the government to spend money and do things for them. But what people don't realize is, where does the government get the money to do that? They get it from the people. That's where the disconnect comes in. People think they're getting stuff for free from the government. They're not. The government takes money from the people to provide services for the people, and if citizens have to start paying into this and feeling some pain, maybe they'll think twice about, okay, what's the government spending money on? That's the good side, but there's a negative, and the negative far outweighs the positive. The negative is this. Reaching into someone's bank account and helping yourself to someone else's money is called stealing. And you can rationalize it all you want. You can paint it up and say, well, they're only hurting the wealthy people. Well, Cyprus is very small. Well, they're only hurting Russian oligarchs. Well, it's a one-time unique event. Okay? But the truth is, what you're saying is, it is okay to steal money under these special circumstances. And once you've said that it's okay to steal money, once you've released that poison into the atmosphere, then it's just a matter of saying, okay, it's all right, it's okay to steal. Now, under what circumstances? Now, all we have to do is change the circumstances. So, it is they've crossed the Rubicon. And what this means is that if you have over 100,000 euros in a European bank account right now, you should probably be making other plans. Okay? Now, yesterday, after all this went down, right, after the bailout terms were announced, Mr. Dijsselbloem, he's the head of the European finance ministers, he let loose that they might do this again. They might just reach into people's bank accounts again. I mean, if you read this quote, and just look at the line in red at the bottom, if the bank can't do it, we'll talk to the shareholders and we'll ask them to contribute, and if necessary, the uninsured deposit holders, uninsured meaning over 100,000 euros. So he's basically saying they're going to do it again. He's going to use Cyprus as a template. That is the word that's being thrown around the most. And it's accurate. It's accurate. Now, a few hours later, so the stock markets start to crash on this news because he's basically saying your money's not safe in the bank. Your money is not safe. So a few hours later, he comes out and says, listen, Cyprus is a specific case. No models or templates are used. He's trying to unring a bell. He's trying to put the toothpaste back in the tube. Right? He's trying to put the genie back into the bottle. But you know what? If you're paying attention, I think you're already, if you're in Europe and you have over 100,000 in your account, I think you're already at this point filling out an application for a Swiss bank account. This picture tells it all. You can see, right, this gentleman, this is the Cyprus bank, right? And so he's the Cyprus banker. He's holding up the depositor, but who's got the gun at his back? That's Europe, and that's important because, you see, if this was specific to Cyprus and it just emanated from Cyprus, then you wouldn't have to worry too much in other European countries. But if you're in Greece or Portugal, I think you got to believe that you're next, or you could be next, because it's the European Union. This was their idea. They're the ones who introduced this poison into the system. And now they're trying to backpedal. Now, here's the crazy thing about it. So what happens when you destroy confidence in the banks? People will start to pull their money out. They're going to send their money to Swiss banks, U.S. banks, right? And other countries, and German banks too, But here's the thing, right? Where did this whole financial crisis begin? In the banks. What do the Fed and the ECB, what do they keep doing? They keep pushing money where? They keep shoving money into banks to try to prop up banks. What is this going to do? What is going to be the effect of this process? in Europe, it is going to push money away from the banks. It puts us right back into the soup. It is so counterproductive. It is just incredibly dumb. Okay? And so anyway, that's the new type of bank robbery. Now, who's getting most of the blame for this? It's going to be Merkel. It's going to be Germany. It's going to be the states that are in better shape, that are seeking austerity. And, I understand their point. I mean, why should they have to pay everyone's bills? Right? Let somebody else chip in and see how they like it. But the problem here is that Russia's very unhappy. A lot of that money is Russian. And because Cyprus is an offshore haven, Cyprus is a lot like the Cayman Islands in that sense, right? So, are they going to blame Cyprus? No, the Russians are going to blame Europe in general, and probably Germany in particular. That means there will probably, at some point, there's going to be either some kind of an economic punishment, or maybe in the dead of winter, the pipeline with the heating oil gets shut off that comes out of Russia. Something's going to happen. There's going to be some kind of a repercussion out of Russia. But the thing that I want you to take away most from this is that what they are chanting in the streets of Cyprus right now is loosely translates to, "We're the first, you are next." Meaning, hey, they took money out of our accounts, but guess what? Now it's going to happen to you. And that's your thought for the day. So anyway, that's it for our little Cyprus bailout presentation. Let's get to your questions. And again, I hope if you get a chance, check out that CNBC appearance. That has been described to me as brutal and merciless. And I was basically making fun of some of the European finance ministers, etc. And so I hope you'll enjoy that. Okay. I always try to keep it quick and entertaining and give them a laugh or two, but at the same time, you got to tell it like it is, and that's what I try to do. Now let's get to some questions. When do you think UK interest rates will rise? It's a great question from James Brown. I don't think that's going to happen anytime soon. I think rates in the UK have to stay right where they are probably for, you can only see out so far, but if I had to guess, I would say 12 months. But the thing that I find interesting about cable right here is, everybody's talking about how strong the dollar is, but this looks to me like potentially an inverted head and shoulders is forming on cable. So to me, that's the most interesting thing I can tell you about the British pound right now, is that technically speaking, British pound, now this is the key level, 152.80. That line is not necessarily the neckline of the head and shoulders, but the reason why that line is there, like if you look back, this is a very major point. It's 152.80. And you can see that level acting as support in October of 2011, January of 2012, and right here in June of 2012. And it finally breaks in 2013. That area should act as resistance. So there's no way that I'm buying this unless it can clear 152.80, but that does look to me like an inverted head and shoulders. That does look bullish. Now, a lot of people are saying the dollar is strong. The dollar index is strong when you look at it in terms of the dollar index, but just remember that the dollar index consists mostly of the euro, and the euro is very, very weak. If you look at the dollar in terms of other currencies, the dollar isn't really that strong, and it looks like the British pound may be setting up against the U.S. dollar here. Predictions for gold, long and short term. Listen, we'll go to the chart. I'll let the chart make the prediction. Now, it appeared to me that this was trying to form a rounded bottom. But look at this line that I drew here. You notice that this is the resistance level, and there's a gap here. But gold could not break above that line, and it's falling back now. And you can see the 50-day moving average coming down. Gold's clearly in a downtrend. I think that you can have quite a rise in gold without breaking that downtrend. To me, that trend line is right about there. It's fairly consistent with the 50-day moving average, which is in blue. And this looks to me to be a channel. Right? We'll draw a parallel line here and drop it here. So it's like I do a lot of technical analysis. I do a lot of charts. Some people think I'm only a technical analyst. Some people think I'm only a currency guy. But you know, I trade for my clients. I trade stocks and currencies. I do some educational stuff on the side. Because I love talking about this stuff. You know, I do some television because, frankly, you know, I think I have something to offer, so I put it out there. And that's what I'm saying here is that this is not a prediction. You know, the chart is the chart. And according to this chart, we just can't break above this line right now. That's 156.5. By the way, we're looking at GLD, which is an ETF of gold. That makes it a lot easier to trade gold. You don't have to own a futures account to trade gold. I can trade it in my stock account. That gap is big. That's a big deal. But, you know, look at that resistance line. Can't make it through. The trend is down. I'm a trend guy. I basically bet on trends to continue until they prove me wrong. So, you know, I did think this was going to pop a little bit, but it did not. You know, this is not a prediction. This is only good if it breaks resistance, and it just could not break resistance. Okay, what about, is there a future for the euro? Wow, that's the $24,000 question. Look at the chart I drew up for euro. I think you'll find this interesting. I see this as a head and shoulders within a head and shoulders. So you've got your left head, right, and it's what I like to call a impatient head and shoulders, because the right shoulder doesn't even form properly. You just get half of a right shoulder and boom, down it goes. It's like, hey, I can't wait. And then you get left head, right, and again, it's an impatient head and shoulders. Can't seem to form that right shoulder. Hey, I can't wait. It breaks down. Not quite as bad as the earlier breakdown. But look at this. After flirting with this moving average for 5 days, that red line is your 200-day moving average. We have closed underneath the 200-day moving average for the first time this year on euro, and we're trading beneath it today as we speak. So that's pretty bad. The one thing I spoke about on television last night was this big wick. And you see, this was a very painful experience for people who were bullish. Pain is something I think about a lot as a trader. Not my own pain. I look at the charts. When I'm looking at the chart, a lot of time I'm looking for other people's pain or other people's pleasure, because I know that's what human beings react to. They react to pain and pleasure. And you had a nice rally on Friday. You dipped a little bit at the open, and then a nice rally on Sunday night, and the euro looked like it was breaking out, breaking resistance. It was going to run, and then boom, it very quickly reverses. A lot of this was Dijsselbloem's fault, you know, when he basically said, hey, you know, we just might do this again, and that had a lot to do with this. And you got to think about, how does that feel? You know, you're hopeful, you're thinking the euro's going to, no. And you get smacked in the face hard. And the fact is, you can see the big red candles. That mean it went against you very quickly and very hard. How does it feel when you're in a position and it's going against you very quickly? You know, maybe you got up from your desk and you were up 20 pips and you came back and you were down 50. You're like, oh my God. You know, so, you know, it's a very negative feeling that it creates. And I think about that because when I know that somebody really got hurt, then I know they're probably not going to engage in whatever behavior injured them. So if you got hurt really bad buying the euro on Sunday night and it just smacked you right in the face, what are you not likely to do? You're not likely to buy the euro again anytime soon. So what that does is that takes some of those bulls, it takes them out of the equation. The people who pushed it up to here, by now they know they made a mistake, and they'll be back someday, but not right away. It's like putting your hand on a hot stove. What are you going to do if you put your hand on a hot stove and you burn your hand? What's the one thing that you are not going to do anytime soon? You're not going to put your hand back on the stove, and that stove is the euro for people who went long on Sunday night. So is there a future for the euro? That's a tough question. I do think there's a future for the euro. I just don't know if it's going to look exactly the way it looks right now. I think some countries are going to have to leave eventually. You might even have two different euros. You might have a northern euro and a southern euro. Why? Because the northern euro is the stronger financial countries. Southern is weaker financial countries. And I think the ones up north probably get tired of picking up the bill for the ones down south. And yen pairs play. Well, let me tell you something. I mean, yen pairs, to say the words yen pairs play is pretty vague, but I will tell you what I think about dollar yen here is I think, again, the strength of the U.S. dollar is overstated by the dollar index. If you look at this chart, the dollar is starting to slip against the yen very slowly over the past few weeks. And this is an hourly chart. This also looks like a big, a big double top. We actually got under 94 for the first time since March 6th, yesterday evening. So what's going on here? Well, listen, everybody already knows the story about Shinzo Abe and the Bank of Japan and Kuroda being the new head of the BOJ and all the wonderful things that they plan to do to weaken the yen and create inflation. But you know what? That's the whole point. Nobody's really talking about that anymore. Everybody knows about it, so now it is finally priced in. During this entire rally, the Bank of Japan actually did what? Nothing. They didn't do anything. Okay? All they did was make plans and talk the talk. Nobody's walking the walk yet. In addition, you are at the end of the quarter here. And at the end of the quarter, there is a factor of repatriation where money comes back into Japan. Is that a big factor? No, because we actually in this room went back and looked at the end of March for a lot of years going back, and the dollar-yen pair does not have a strong tendency to fall at the end of the quarter. Why? Because Japan's fiscal year ends at the end of March. So you're currently in the last days of Japan's fiscal year, and they have to bring money back home at the end of the fiscal year. The companies have to repatriate money. And we say in this room, follow the money. If the money is flowing back into Japan, you would believe that would make the yen stronger. But the truth is, if you look at it objectively, if you go back and look at the charts over the years, that has not always been the case. In fact, it's hard to make a case that the repatriation is having any real impact on the currency. Great question. Is there an end to euro with Cyprus fiasco, or do we trade the flow? Well, it's not an end to the euro. The euro might, at some point, someday, some country is going to end up leaving the euro. Maybe it'll be Cyprus, maybe it'll be Greece. It'll happen. Because Greece will probably need to be bailed out again. And when that happens, that's probably when people are going to throw their hands up and say, that's enough. Right? When I say people, I'm talking about the Northern European, the Netherlands, Germany. Excuse me. At that point, they may just give up. The Europeans say it's okay to steal as long as it's Russian money. That's basically what I'm saying here. They're trying to rationalize and justify this horrible thing that they're doing. And what it does, all they're doing is undermining faith in the banking system. Now Cyprus's banks are going to be closed until at least Thursday. And I'm thinking, it's a big holiday weekend for a lot of people, so if you're going to close them to Thursday, just push it to the other side of the holiday weekend. You don't even have to open until Tuesday of next week. So, they're in no hurry to open the banks, and that just makes them look worse, like they're not prepared. But I agree. They're saying it's okay to steal as long as it's Russian money, and that's wrong. Bernanke is doing the same with QE. I think you could definitely make that argument. It's a different type of theft, let's say. The thing about quantitative easing is again, people think it's free money. They don't understand that the more money you pump into the system, the less each dollar is worth. And people say, well, there's no inflation, so you're wrong. Well, that's not true. It's not wrong. The thing is, when you're pumping money into the system, that's like pouring gasoline on the floor. I could pour a lot of gasoline on the floor without starting a fire. Why? What's missing? What's missing is a spark. The spark that would set off inflation is economic growth, and there is none. I mean, growth in the U.S. and Europe is pathetic. Pathetic. And especially pathetic when you think about all the money that's been pumped into it. Just trillions and trillions of dollars to get 0.1% growth in the U.S. is just beyond pathetic. So once you get economic growth, that's the spark that lights that gasoline. Now, even then, you can still mop up the gasoline before it all catches on fire. The Fed pushed the money into the market. It can pull it out. The question is, are you confident that they will be able to do that effectively and in a competent manner, or will they sit there and watch it burn? To err on the side of caution. Caution for growth, not caution for inflation. That's my concern. If you have a deposit above 100K, you could be toast if things go wrong. Why would any small, medium business risk banking in Spain, Portugal when they could bank in Germany? Great question. Or while they could bank in Switzerland or the U.S. So I think the big winners here are going to be, if you're trading stocks, you might want to take a look at stocks like UBS and Credit Suisse, right? The big Swiss banking giants. Take a look, and maybe in the U.S. Company like Citibank, which has branches all over Europe. You can go all over Europe and still find a Citibank. So, I don't know. I would not keep money over 100,000 in a European bank right now. I would be concerned. It's not going to be a panic, but at the same time, I think it's going to be a slow bleed of money leaving. I heard Cyprus banks have been paying higher interest rates than elsewhere in Europe. Do you know anything about that? Well, it's possible. I mean, banks in Brazil pay higher interest rates. I mean, but I don't know anything about that. I'm not an expert on Cyprus banking. But the main reason why those banks are popular is not because of interest rates. I'm sure that it's because it's an offshore haven. It's like the Cayman Islands. You can put a lot of money there and avoid taxes or launder money, and it's kind of understood that that's what goes on, and that's why I guess it's okay to steal from those folks. At least that's the rationalization. Of course, it's not okay to steal from anyone. The cartoons. Someone's drawing very nice cartoons about the whole situation. Euro seems no buying interest as well. Sell interest at this level. Well, how long this interest will last? Well, I said on the presentation 126.60. I said on CNBC last night, and if you look at the chart, 126.60 is the only support level in sight for this currency. Inflation is a form of tax. Agree 100%. That's 126.60 right there. So I see that as the next stop. There's really nothing preventing it, right? There's no activity in here, no major moving averages, nothing to stop it from falling. So I agree. I think you're going to see a little bit lower on Euro. What do you think of Euro Swiss? It's a great question. Euro Swiss actually, I think, could fall because I do think you're going to see a flow out of Europe and into Switzerland. So technically speaking, Euro Swiss probably goes back closer to that 120 level. I don't know if it's going to make it all the way down there. But yeah, I think that's an interesting currency pair right now. Inflation is a form of tax. That is true. It's just a different form of tax. Inflation confiscates money from savers, which is exactly what they do in Cyprus. Okay, and somebody's saying kind of look at pound Aussie. And pound Aussie is, Aussie is the strongest thing out there right now. Aussie's crushing the dollar, crushing the pound, crushing the euro, and pretty much this. If you think about it, and this before I sign off, why is the Aussie so strong? Well, they're not bailing anybody out, right? And Australia is not engaged in any quantitative easing, and nobody in Australia is whining about the currency being too strong. In fact, the central bank, the not the head of the central bank, but his underling, the assistant head of the central bank in Australia, said that the strong currency is good because it keeps inflation down. So Australia is doing everything right. There are now 16 countries that are using the Australian dollar as part of their reserves. So why? Because better economy, and they're not doing all these really horrible things that other countries are up to. Okay, I'm done. Thank you so much for listening. I'm going to be back in 30 minutes, so don't go away. My name is Ed Ponsi. I'll see you back here in a half hour. Everybody take care.